everyone. Thanks for joining us. We're here today to talk about the Paycheck Protection Program. And very briefly, again, my name is Mark Schmidt. I am the Chief Executive Officer of Fundex Solutions Group. We are one of the only 14 non-bank SBA lenders in the country. We are based in Syracuse, New York. And we made about $150 million worth of PPP loans in the first round. And we're busy with the second round right now. Agenda today, I'm going to try and cover quite a few things. There is a lot to cover. There are three major topics kind of listed in the center there. That would be the first draw PPP loan, second draw PPP loan, and then the forgiveness process. Now, I'm sure some of you are probably most interested in the first draw process, those of you who did not get a PPP loan last year. There may be some of you interested in a second draw, for those of you who got a PPP loan last year and may qualify for another one this year. And then that same group that got a first draw last year, probably interested in the forgiveness process. So those will be the three major topics that I'll cover. I just, I'll do an overview of each of those areas. We'll talk about some of the major rules. We'll talk about, we'll show you some of the forms. I'll try to cover some of the frequently asked questions that we're getting and some of the issues that we're running into. I would just also advise that there's a lot of complexity involved in all three of these areas. We've had 4 laws passed that address PPP. SBA has issued some 25 or 26 regulations, each of those anywhere between 60 and 150 pages, and a large number of Q&A documents and other guidance. So we're trying to boil that down to the most important issues for you all, those of you who are considering a first draw or a second draw or thinking about the forgiveness process. And we'll kind of follow this agenda. We're going to open it up for Q&A. I'm going to try and save at least 10 or 15 minutes at the end and answer some questions for you all. Those that we do not get to during the session, I'll be happy to address those later in writing through email or otherwise. So if we don't get to your question today, we'll make sure we get to it later. Let's start with a little background on just PPP in general, what some of the major concepts are. The PPP program, of course, was launched during the CARES Act in March of last year. The objective of the program was basically twofold. Number one was to preserve small businesses, but almost more importantly, to preserve jobs. And that's why it's called the Paycheck Protection Program. It was basically a loan program that could turn into a grant if you follow the rules properly. The amount of the loan, that's the first item here, the amount of the loan or the PPP loan, the forgivable loan, is based on a concept called payroll, right? And that's payroll, probably should be in capital letters because it includes, as you can see here, just about everything included in payroll, not just wages and commissions and that sort of thing, but all benefits for employees, including health insurance, life insurance, retirement benefits, and that sort of thing. Anything that is an employee compensation or an employee benefit is generally included in the definition of payroll, and the loan amount is based on that. Okay, it is you take the annual payroll for 2019, or now you can use 2020 now that we're past that, and you just determine what the monthly average was. You multiply that by 2.5, and that's how much of a PPP loan you could qualify for. 2.5 months, your average monthly payroll. The last bullet under the payroll is very important, however. In the CARES Act and subsequently, Congress has limited payroll for any individual employee to $100,000. So if you have anybody on the payroll that makes more than $100,000, you have to reduce it to $100,000 for each such individual before you determine the monthly average and then multiply by 2.5. So that's a concept you'll hear 2 or 3 times during the presentation, because I know it does affect a number of healthcare professionals. And we have probably half of our portfolio is healthcare professionals. So we've seen a lot of what you're going through and what some of your issues are, and that's one of the big ones. Again, PPP's loans are designed to be forgiven if certain criteria are met. I mean, this is obviously a stimulus program to address the pandemic. We'll get into more details on that. This last bullet here is kind of important. You might remember there was quite a bit of press and controversy around some of the larger loans, especially as to whether borrowers that got loans or applied for loans actually needed them, because at the time of applying, you had to certify that economic conditions suggested that you needed assistance from the government. Subsequently to that, there's a lot of question around some of those larger loans, but the good news for most of the smaller loans, the government has basically said, if you're under $2 million, you are deemed to meet that criteria. So you don't need to worry about a certification of need if you're under $2 million. You just have to meet all the other criteria. So these are some of the basic concepts. A few more are, once you get the loan, once you get the PPP loan, there's something called a covered period. That starts on the day that you get the funds. And it lasts for anywhere between 8 and 24 weeks. And this is at your choice. You can decide any time frame between 8 and 24 weeks. And that's the period during which you have to spend the PPP funds on eligible expenses in order to have them forgiven. Okay, that's the key, is to have them forgiven. You have to spend the money on eligible expenses within the covered period. We've had a lot of borrowers been able to do that in 8 weeks. Some have chosen 24 weeks. It just depends on the economic circumstances. Eligible expenses. The expenses that you're allowed to spend the PPP money on and have it forgiven is listed here. And that includes two things, basically. That's payroll. And again, that was defined on the previous slide. It's all this payroll, everything here that meets payroll. And then non-payroll is added. Now, non-payroll is not counted when you determine the amount of the loan, but you can use some of the PPP money on non-payroll and have it forgiven. So that's why you need both concepts here. If you spend it all on payroll, that's fine. That's easier. It's a simpler forgiveness application, but you don't have to. You can spend up to 40% of the forgiven amount can be on non-payroll expenses. Those are listed here. And these are basically typical business expenses, mortgage interest for your property or rent, utilities. These last three bullets were added in the Economic Aid Act that was passed on December 27th. So these are brand new. You can now spend PPP money on a much broader set of expenses, including operations, supplier costs, worker protection, PPE. That was a big one. That's especially a big one in the healthcare industry. One thing to note, for mortgage interest, rent, utilities, all of those items must have been in place on February 15th. You'll hear that date a number of times. February 15th of 2020 is a critical date for a number of purposes. And you'll recall that, the CARES Act was passed in March. They said Congress determined that basically the impact was starting to happen prior to that, and they chose February 15th as the determining date for calculating a number of things, and basically to compare pre-pandemic operations to post-pandemic operations. And the Economic Aid Act, this is the most recent law that was just, again, signed on December 27th. It did a number of things. First of all, it reopened PPP. You might recall PPP was open initially last April. The money ran out very quickly, like within a week or 10 days. And then Congress reallocated a lot more money, another $300 billion. That amount actually never was totally used up. The program expired late last year, and there were still $150 billion that was unused. And that was a surprise to some of us, especially considering how rapidly the first $300 billion disappeared. But what they've done is they've reopened the program again with 285 billion through March 31st. Now that 285 billion is for both first draw and second draws, whether it's your first draw or your first PPP or your second PPP, it comes out of that 285 billion. I personally, it's going relatively slowly. Less than 100 billion has been allocated. I think it's probably going to last a good long time for a couple of reasons that we'll look at here in the middle of the slide here. Let me touch on number one first, the forgiveness process. This is probably the most important thing from the December law. The forgiveness process and forms prior to this were complicated, to say the least. Congress heard that loud and clear from the industry and from the borrowers, and they mandated the SBA to establish a one-page forgiveness application for anybody that had $150,000 or less PPP. And that's somewhere 75, 80% of the loans are below that. The average is about 120 or 125. So this will help a huge number of borrowers in the forgiveness process. There's still, you still have to follow the rules as far as what you spend the money on and that sort of thing. But it's a much easier process. And now the second draw PPP loan, this was, not only did the December law re-up PPP for those who didn't get one in the first round, it allowed a lot of borrowers who got one in the first round to get a second one, but much more stringent criteria. And we'll look at those here real quick. 300 employees, 300 or fewer. That was 500 for a first draw loan. And the second bullet here is probably the most important. In order to qualify for a second PPP loan, you have to be able to prove that your gross receipts declined by 25% or more in any quarter in 2020 compared to 2019. Now, most of our healthcare professionals are doing that, showing second quarter numbers. Second quarter was when a lot of practices were shut down. Elective surgeries were basically shut down, that sort of thing. So many of our healthcare providers are able to show that just by giving us second quarter 2019 profit and loss statement and a second quarter 2020. And this is not gross profit. This is not net income. This is gross receipts, meaning basically total income from all sources. If your top line income was reduced by 25% or more, you may qualify for a second draw PPP loan. The other criteria, of course, you had to have used your first draw PPP loans, otherwise you don't need a second one yet. And again, the amount is the same, 2.5 times your monthly payroll expense, but you can now use the calendar year 2020 if that works better for you instead of 2019, which everybody had to use in round one. And then we already talked about the additional eligible expenses that were added. The Economic Aid Act, we're past most of this. On January 18th, all lenders were, they finally opened it up. They'd phased in the which lenders could participate. We're now into early February. We've still got almost 2 months before the program closes. I tend to think that if March 31st arrives and we still have demand, Congress will probably allocate additional funds and extend that date. But I still would try and get in before that deadline if you're interested in a PPP1 or a PPP2. Now let's talk about, I mentioned there's three major items. It's that first draw or your first PPP loan, second draw, and forgiveness. Let's spend a little time on the first draw process and eligibility. Before I go through this, I just want to note the Fed came out with a survey just in the last day or two that says they surveyed a large number of small businesses, and their data indicate that 25% of small businesses did not apply for PPP1 because they thought it was too complicated. Another 30-some% did not get a first round PPP loan because they didn't think they qualified. Now that surprises me because the qualification criteria in the first round was should have probably covered a lot of small businesses. That, you know, the biggest one was less than 500 employees. And of course, most small businesses do have less than 500 employees. But here are the criteria: borrowers eligible, large group of small business entity types, and to include some nonprofits, so and independent contractors, sole proprietors. You know, just about any type of small business was eligible, as long as you had less than no more than 500 employees. And again, here's that February 15th, 2020 date. You had to be in operation on February 15th, 2020. And that has caused a little confusion for some people who have tried to apply after that for new businesses. You cannot have received a PPP loan, of course. Now this first draw, most should not or would not have. And this next bullet is very important: no delinquent federal debt, not in bankruptcy, and no criminal conviction. I'm sorry, I think my lawnmower guy just showed up. That's the noise you hear. He'll be gone shortly. That bullet has tripped up some people, and it's particularly around student loans, believe it or not. We had one just a couple days ago that applied for a second draw, and the SBA has denied it because of some delinquent student loans. And of course, the question is, why wasn't that caught the first time? The reason is, when the program rolled out last year, it rolled out so fast that these types of validation checks were not in the system. SBA added them all subsequently. So we now have a $200,000 PPP loan that not only is not eligible for a second draw, they're not eligible for forgiveness on the first draw because of delinquent student loans. There are a few other things that are very important that you be able to certify those. And then again, the details: this is the dollar amount, 2.5 times average monthly payroll. There's that $100,000 cap on any individual employee. And now these loans are 1% rate, 5-year term, no personal guarantee. So even if you don't get forgiven, it's a pretty darn good deal. But again, we think the vast majority will be forgiven. A Fed survey indicated that 80% of borrowers thought they would get 100% forgiveness, and we're seeing probably an even higher percentage on our borrowers. So these are the eligibility criteria. Not that tight. If you got less than 500 employees and you were in business on February 15th, you don't have to show an impact from the economy. You just have to be a small business that meets those criteria. And then the first draw, show you the application. You know, it looks, you need to be careful. You need to make sure that you fill out these various line items correctly, that you answer the questions correctly. And you'll notice, I know you can't read this, but in the questions is, you know, some things about, you know, are you delinquent on any federal debt? Do you have any criminal convictions? Are all your employees in the United States? Some things like that that you must answer correctly, or you will not be eligible. But what's particularly important is the little things like the taxpayer identification number and the Social Security number. If it's a business, it has to have an EIN. You can't use a social. We've had a number of applicants tripped up over that. And it's causing them problems getting the second draw because the first draw was wrong. And again, part of that is because the filters were not in place for the first draw. You know, the program was rolled out so fast on the first draw that the SBA did not have time to introduce the validation checks. They've done it after the fact, and there are a large number of PPP hold loans that are on hold right now for further review and for cleanup of things like Social Security number, even address, things like that. Nothing real complicated there. You just need to be careful and fill out the number. And you'll see about a third of the way down is average monthly payroll. That's that number I told you about. That's tripped up a number of borrowers also, but that's not that hard to come up with. You can, if you have a form W-3 that covers all your employees for a calendar year, which is what the form is designed to do, you need one piece of paper. Or a 940, which is a combination of all your quarterly 941. So those are tax forms. So in essence, you can use just one piece of paper to supports your average monthly payroll number. Now, of course, a W-3 would not include the benefits. That's just wages paid. We've still had a lot of borrowers just apply based on wages. But to that, you could add your employee benefits if you wanted to do that also. And then you fill in the number of employees. So that just, you get a feel for the complexity here. This is only page one. There's a second page where you have all of your certifications that you have to, that you certify that you'll follow the rules, that you'll spend the money on eligible expenses, that you understand the covered period, that sort of thing. Let's move on to second draw. Let me just, we've talked about most of the eligibility criteria here, right? 300, less than 300 employees. Again, that's down from 500 for a first draw. You have used or expect to use all the PPP first draw funds. And then here's that gross receipts reduction. This has cut out a number of borrowers. The Fed survey suggests about half of the borrowers, only half of the PPP1 borrowers will be able to demonstrate a 25% decline in gross receipts. We're seeing a little higher percentage on our second draw applications. And part of the reason is the healthcare concentration that we've got. And a lot of healthcare providers were closed down in second quarter, and unfortunately, their business was down 25% or more, and which makes them eligible for a second draw. Second draw details are very similar to the first draw. It's also 2.5 times the average monthly payroll. And again, you can use either calendar year 2019 or calendar year 2020. And there's a $2 million maximum on a PPP2 loan. That was and still is $10 million for a first draw PPP loan. And between that reduced cap and the requirement that you have the gross receipts decline, that's what's cutting out a lot of first draw borrowers from eligibility. The dollar amount's much lower. And see me and hear me now, or see the slides. We had already talked about the eligibility for second draw. And then I think I was just talking about the dollar amount. Again, it's very similar to first draw, 2.5 times average monthly payroll. You can use either 2019 or 2020, $2 million maximum. It's actually 3.5 times monthly payroll in hospitality or food services. I don't think that applies probably to anybody in the audience here. Good news, forgiveness rules and processes are basically the same. They use the same form, so you don't have to worry about the forgiveness process being different for a second draw PPP loan. Again, keep in mind the $100,000 annualized salary cap when you calculate the payroll, and also when you use the funds on eligible expenses. Terms are also advantageous. One thing to note right on the bottom of this slide, if you have a first draw loan, there is a huge advantage to going back to that same lender for a second draw loan. And the reason is that first draw lender already has you in the system, already has all the data, already has the payroll data, probably from 2019, customer identification information and everything else that builds the foundation for a second draw. So if you go back to them, you have very, very little documentation to submit, and probably don't even have to submit any payroll documentation unless you wanted to use a different year. So, but if you go to a new lender for a second draw, they've got to start all over and build the entire file. So it's a huge advantage to both the borrower and the lender to stay with your original lender if you're looking at a second draw. The second draw application form, very similar to the first draw we looked at. Most of the questions are the same.
Good.
At 1:30.
Right now, planning meeting.
Okay, I'm hearing some voices here. Basically the same information. Make sure you get the details right. Taxpayer identification number, contact information, business name and address. You'll have to indicate what you plan to use to spend the money on. You have to indicate your average monthly payroll. Ownership information there in the middle. We didn't talk about that on the first draw, but that's important also. You need to be very clear that you include everybody that owns more than 20% in the business, and then you have to answer the questions accordingly for each of those individuals. It's probably not as complicated as it looks. You do need to read it carefully when you're answering the questions to make sure you answer them properly, and just be careful to fill in the proper information up above. It'll help out a great deal. I should also add that for both first draw and second draw, most lenders have automated this process and have set up a portal to accept applications. And they can do that one of two ways. If you have filled out this form offline, either through your accountant or even by hand, most lenders will accept that through a secure email system or otherwise. But most lenders, including us, Fundex Solutions Group, have set up a portal so that you can, once we give you access to it, you can fill out the form, give us all the information on our portal, and then we'll send you a completed form through DocuSign to sign electronically. So most lenders are trying to make it easier for you that way, as are we. A few other hot topics or frequent questions or issues that have arisen in PPP. Tax impact is a biggie. When CARES Act was passed last spring, it was very clear that the PPP loan proceeds were not taxable. But the IRS took the position that, okay, if somebody else is paying your expenses for you, those expenses are not deductible. So you couldn't have both, the government paying your expenses in essence, and be able to deduct the expenses that are paid with that PPP money. Well, the Congress got an earful on that one also. And in the Economic Aid Act that was passed in December, they changed that. And now, not only are the PPP loan proceeds not included in taxable income, but you can use that money to pay expenses and still deduct them. Now, we can argue all day whether that's double dipping. It probably is, but Congress has decreed it, and it is a heck of a benefit to anybody and everybody who gets a PPP loan. In the CARES Act, there was a provision that if you got an EIDL advance, an EIDL is an economic injury disaster loan. That's a separate program that's administered through the SBA. These are the disaster loans you've heard about for years and years. The entire country was declared a disaster area, if you will, in 2020 because of the pandemic. So virtually any business qualified for an EIDL loan in addition to PPP. EIDL loans need to be paid back, however, except for the first $10,000. Actually, it's $1,000 for each employee up to 10 employees. And the CARES Act basically said you can't have both. I mean, you can't have a fully forgiven PPP loan and have a $10,000 EIDL advance. Well, the recent law just changed that, and now you can have both. Unfortunately, the advances are no longer available. But for those people who got an advance last year for $10,000 and a PPP loan, they can now don't have to pay either one back if they meet the criteria. Get a lot of questions about handling PPP money, about whether, how careful you need to be. Do I need a separate bank account so I can, prove that I spent it properly? And my answer is no, you don't need that because you have to give me all the receipts anyway. Now, if it helps you in your bookkeeping and accounting, then fine. And a lot of our borrowers have done that. But what's important is to keep all of the documentation around those expenses. And we talked earlier about what eligible expenses are. Remember, there's two categories: payroll and non-payroll. Keep your receipts, payroll records, everything you have to show that you paid that money during that covered period. A few other things, a lot of questions. After the pandemic hit, there have been a number of businesses that have changed hands. So the questions often arises, okay, I bought this business in, last November. They had a first draw loan. Can I get a second one for that business? And the short answer is yes, as long as it's the same business, it's same corporation, same entity. So that is allowable, and we have seen quite a bit of that. And once again, the thing to keep in mind is if you started a new business after February 15th, that's not eligible. So again, that's that February 15th date. That's the demarcation line that Congress drew in the CARES Act. That's pre-pandemic versus post-pandemic. If you were not in business on February 15th, 20, you're not eligible, period. And again, we use that date for other items also. Let's see. Overall PPP timeline, I think you've probably got a feel. This is just a high level, that chronology. You get your money, you have to figure out what covered period you want to use. Remember, we talked about that. It can be anything between 8 and 24 weeks. Then you spend the money on the eligible expenses during that covered period, because that makes them forgivable if it's spent during the covered period. Put all your receipts documentation together, and then begin the forgiveness process by filling out the application form. I'll show all three of these forms to you. I will explain who's eligible to use which forms, and I'll tell you up front, it's another complex or somewhat complex determination. And then once you submit it to your lender, take a look at that bullet number 8 there. If your loan's over 150,000, you have to submit all the documentation. We talked earlier about the Economic Aid Act made it much simpler for loans under 150,000. It's a one-page form. There is no documentation to be submitted with it. So that was hugely helpful. But if you're over 150,000, you still get the whole 9 yards when it comes to the forgiveness application process and the documentation of all of your expenses. Once you submit it, and again, here's these 3 forms. You have to figure out which one applies to you. You submit that, and then as necessary, receipts, other documents. There's also a loan necessity questionnaire, which is relatively new. That's for those large loans we talked about earlier. If you're over 2 million, SBA and Treasury basically put together I think it's a 9-page document that walks through various liquidity, solvency, and other criteria to determine whether or not that borrower actually qualified and needed the funds. That's not going to be a fun process for a lot of large companies, but it will probably help preserve some taxpayer dollars. Once it is submitted, the lender by law has 60 days to review that. Now, most lenders are not taking that long. We're turning ours around typically in a week or 10 days, except after the Economic Aid Act, the SBA changed all the forms because they had to change all the forgiveness application forms to be consistent with the new law, and their system is not able to accept those new forms yet. I mean, they're focusing on PPP round 2 and some other things. And we're not right now not able to submit forgiveness applications. We're processing them. We're looking at them. We're getting working with the borrowers to get additional information if we need it. But there's a hold at SBA. We were told it'll last another month. We're expecting early March before we are able to submit the new forms that came out in January. But anyway, that's the timeline. Basically, the lender has 60 days. Once it's submitted to SBA with a recommendation, SBA has another 90 days to make a final decision. SBA will notify the lender of that final decision, and it is our job as lenders to notify you of the forgiveness decision and amount. Now, the good news is SBA has typically not been taking nearly that long. We've got a lot of decisions within 2 weeks, and most of them have been favorable decisions to the borrowers because we're trying to make sure they qualify before we submit them, of course. There are some that are on hold. The SBA has an audit process that they put together, of course, to look at some of these forms. And it's your typical audit process. They look at a percentage of them. The only problem is they hired all these people to do it, and they don't have all the volume yet. So the chances of an audit are much higher right now than I think they will be in a few weeks once the volume picks up. And if any amount of a PPP loan is not forgiven, now keep in mind, it's still a 1% loan. And in most cases, it'll be a 5-year loan, especially the new ones. You can see that changed on June 5th. The original PPP loans were 2 years. New law came out in June and said after June 5th, they are all now 5-year loans. So any amount that's not forgiven, newer loans have 5 years to repay. And I will also add, well, that's on a later slide. Let's talk, first of all, how much can be forgiven. We've talked about this, right? Had that on an earlier slide. 2 major items, payroll expenses and non-payroll. I've got payroll here, the first bullet, and then I've got non-payroll are the second 2 bullets. That last bullet are the new ones that the December law added. That's worker protection, supplier costs, and that sort of thing. So there's a lot that can be forgiven. Keep in mind those payroll costs have to be 60% of the forgiven amount. And I haven't had borrowers that really had trouble with that. You know, payroll typically is a pretty significant amount of the operating costs, and our borrowers have largely been able to meet that. Now I should add, and we'll get to that in a second, that as with anything else here, there are conditions attached, right? You can have it, you have to spend it on these types of expenses, but you have to meet a couple of other criteria, and we'll get to those in a second. I want to talk about employees versus owners for a second, because this is important. We talked earlier about that $100,000 cap, right? You're supposed to reduce every, for purposes of calculating payroll, either whether you're calculating it for purposes of applying for a loan or applying for forgiveness. There's a $100,000 annualized cap, and you can see that's roughly $1,900 a week, right? So if you got a 24-week covered period, $1,900 times 24 would be $46,000 that you would pay an employee that makes $100,000. And if it's an employee, that is forgivable. So for an employee, you can have up to $46,000 forgiven based on payments to one employee. But the SBA has said we're not going to allow that for owners, right? So owners are not, owners of 20% or more, they decided kind of arbitrarily in my book. You know, I read the rationale and it wasn't particularly convincing, but they have decided, and it's not in the law, but the SBA and Treasury have decided they're going to cap owner compensation at $15,000 for an 8-week covered period. And they know that's at $1,900 times 8 weeks. So that's the same amount you would pay an employee, right? That makes $100,000. And then if you have a longer covered period, in this case, I've listed a 24-week covered period, instead of that $46,000 number up above with 1,900 times 24, they have said owners can only have 20,833 forgiven. And they arrived at that by going back to the original formula, which was 2.5 months worth of pay. 2.5 months at $100,000 comes out to 20,833. So the cap for forgivable expenses paid is different for employees and for owners if you have a longer covered period. If you got the short covered period of 8 weeks, it's the same. You get a longer covered period, it caps the owner compensation caps. So that's important to keep in mind for your highly paid employees or owners. I mentioned that there are always exceptions, right? We've talked about what gets forgiven and what the expenses are. But if you have either reduced FTEs based on a pre-pandemic number, or if you've reduced wages by more than 25%, you have to reduce your forgiveness amount unless you have restored either the FTE count or the salary amount before, on or before December 31st of 20. Now that's different for the new loans that will be taken out now. The restoration date now becomes the end of the covered period. This introduces a lot of complexity. I mean, just look at these criteria. How do you figure out FTEs? How do I calculate, 25%? And, we're not going to have time to go through all that, but this is where there's some complexity, but there's some good news for smaller loans. Number one, if you, well, let's save that. Let me get to that in a little bit, but on the overall, keep in mind, forgiveness can be reduced if you cut employees or cut salaries. When are payments due? Payments, if you have unforgiven PPP loans, if you apply for forgiveness and you are not approved for any amount, you have to start making payments on that unforgiven amount immediately thereafter. If you, but then the question arises, what if somebody doesn't apply for PPP? When the payments start? Well, Congress determined that it's 10 months from the last day of the covered period. There's a presumption for this purpose that the borrower is using a 24-week covered period. So 24 weeks, roughly 6 months. You add 10 months to that, you go 16 months before you have to start making payments. And that should allow anybody and everybody to have plenty of time to submit that forgiveness application, get it through the process, get a decision, and hopefully be forgiven. So you don't need to worry about payments kicking in before you get the forgiveness decision. We've already talked about preparing for forgiveness and the types of receipts that you need to keep. In the interest of time, I'll move through this. Now let's talk about these PPP forms. I showed you before, there are 3 different forgiveness applications forms. And again, here's where it gets a little complicated. 3508S is for $150,000 or less. But here's a kicker. There's different rules for 50,000 and below. The same form, different sets of rules. That really helps. 3508 Easy is a short form for loans that are above 150,000 that meet certain criteria. And then 3508 is the dreaded long form where you have to fill out every schedule, attach all of the supporting documents, receipts, etc. And you can see what those are here. Schedule A worksheet, there's a Schedule A. All needs to be submitted with Form 3508. So hopefully most of you will be able to use the S form or the EZ form. 3508, you're probably going to need help from your accountant or CPA. Start with 3508S. I mentioned this covers any loan $150,000 or less. And it's a one-pager, and all you have to do is certify that you comply with the rules. Tell us what your number of employees you retained, how much you spent on payroll, and then there's some optional demographic information. This is what the December law gave us. This is a very helpful, streamlined forgiveness application form. It's a one-page form, but you're still required to comply with the rules. And some of the more complicated rules, of course, are around reduction of FTEs and reduction of hourly wages. But here's some good news. If you're $50,000 or less, those provisions are not applicable to a loan of less than 50,000. They basically waived those provisions. So if you have a PPP loan of 50,000 or less, you don't have to worry about FTE count. You don't have to worry about reduction in wages. If you're between 50 and 150, you can still use this form, but you have to, behind the scenes, you don't have to submit it, but behind the scenes, you have to make these calculations and adjust accordingly. So that's what I mean by one form for 2 groups of borrowers. Unnecessarily complicates things in my opinion, but they rolled it out pretty quickly. So, but it is very helpful. One-page form is very helpful. This is what it looks like. Very basic information. Right in the middle there, you'll see you've got to give me your covered period and the amount spent on payroll, and then the requested forgiveness amount. Otherwise, you just have to initial that you follow the rules, sign the thing and get it in, but be very careful up top to get the taxpayer identification number, business name, exactly the way it was on PPP1 and the tax documents. Anything that's number transposed, et cetera, will gum up the works. It'll cause delays. It'll probably cause exceptions from the SBA. So just be careful with the numbers, but this is very helpful again for any loan under 150,000. But keep in mind between 50 and 150, you still have to go through the exercise of determining whether you reduced employees or reduced salaries. Let's look at the easy form. This is the next group. If you're above 150, you have to use either 3508 or the EZ. The 08 is the long form. So let's start with the EZ. And when can I use an EZ? If I'm over 150, what criteria do I have to meet to use the EZ form? And it is quite a bit easier. The criteria are listed here on the slide. It's basically related to those two things I mentioned: reduction of salaries or reduction of FTEs. You know, the purpose was to maintain payroll. And if you reduce somebody's salary or by more than 25%, or if you reduce your average FTEs, it's going to reduce your forgiveness amount accordingly. And if that is the case, if you have to reduce your forgiveness amount, you got to use a long form. But if you meet these criteria, and these are the criteria that, basically you're saying, I didn't reduce FTEs and I didn't reduce salary by more than 25%. If you can meet any of these criteria, you can use the short form, and it's much easier than the long form. But that's the bottom line. Look at number 3 there. They did throw in an exception. If you reduced wages or FTEs, but you were unable to operate the same level of business activity due to compliance with government rules, then you're exempt from that criteria. So that's helpful also, especially for a lot of medical providers that were closed down because of state rules or otherwise. This is what the EZ form looks like. You can see there's quite a bit more. This is just the first page. There's quite a bit more data and numbers that have to be included on an EZ form. You've got to be able to allow a little better reconcile by the lender and by the SBA, but it's still quite a bit easier than long form because you don't have to submit as many documents. And again, you're not making that reduction. You've already certified that you didn't reduce FTEs or salaries, or you meet the other criteria. So those don't apply. So that makes this calculation easier. But again, be careful with the data and make sure you get all the numbers right. Loan forgiveness, here's the long form. Now this is page 1. Now this keep in mind, this is the form you have to use if you're over 150 and if you are going to have a reduction because you reduced salaries or FTEs. And you'll see that down toward the bottom, you've got adjustment for FTE and salary wage reductions. Those are the items that are difficult to calculate because you basically have to go through a worksheet to calculate all the employees. You get different worksheets for the employees under 100,000 as you do for over 100,000. You've got to calculate not only the average FTEs during the covered period, you've got to go back and cover and calculate it for the pre-pandemic quarter to determine whether there was a reduction or not. So there's a lot of calculation involved here. Now, you kind of have to go through that calculations for some of the other forms. You just don't have to fill out all the forms and complete it. And here's this example of what it looks like. Imagine a large hospital or a large company with 100 employees. You've got to have a line for every single employee and fill this out and follow the rules to calculate whether your average FTEs were reduced or whether your average salary was reduced. And again, there's a separate form for salaries for employees that make less than 100, more than 100. Not an easy process by any stretch. And then I talked about the exceptions. This is a little longer form of what they're calling a safe harbor. The FTE doesn't apply if you were unable to operate because of these reasons. HHS, CDC, or OSHA mandates. And we know for a fact that a lot of healthcare professionals meet this, and it's been helpful for them in the forgiveness process. In other words, if you shut down because of the government, your FTEs are lower because the government made you, you don't have to reduce your forgiveness. It's only fair, actually. There are some other exceptions that they threw in we haven't talked about yet. If you, well, I didn't mention this first one. If you restore the wages by December 31st, or the FTEs, then you don't have to take the exception. Now, this is helpful for a lot of borrowers also, because there were temporary reductions. And all they had to do was get back to the FTE levels and the salary levels by the end of the year. That was very helpful for a lot of borrowers to be able to be eligible for forgiveness. And then the other one is laid off employees who refused a rehire offer. Now, this happened a lot because of the unemployment benefits that were in the CARES Act. A lot of employees, not so much in healthcare, but a lot of employees elsewhere were making more unemployment than they were at work. So they were offered a rehire, and a pretty good sized number didn't come back. That's an exception also if you document it properly. So you don't have to count those against you if that happened to you. We're coming to the end here. We've got some online tools for you. This is just a reminder. I talked earlier, most of your lenders will have a portal for you to use their portal to submit either a application for a loan or a forgiveness application. If they don't, there are a couple of pretty good options out there just on the internet. And I've got them both listed here. My favorite is probably the first one. These folks did a very nice job of developing a free platform for borrowers to go in and fill out the forms, and then you can print them out and submit them to your lender from there if your lender doesn't have a portal. So if you're looking for an automated process and your lender doesn't have one, there are some good options out there. That is basically the end of the presentation. I would stop here. Let's see. We have a website here that Serena has put together for us that you can go here to get additional questions answered. And with that, I will stop sharing and see if we've got any questions that we can answer for you. Okay, hopefully you can still hear me. I see some in the chat. Let's see, if you have to close your office or employees go on unemployment for a week, are you still able to use the second loan PPP in 24 weeks, the second loan 24 weeks? Yeah, you can use a 24-week period, even if you're closed down during part of the period. If you got a 24-week period, it doesn't matter whether you're closed down for a week or two or whatever. And that's again why 24 weeks is much more helpful for some businesses than 8 weeks. And then let's see, can you count malpractice as an expense? I don't think so. I don't recall seeing that. It's not a payroll expense, and it's not specifically listed in any of the business expenses. I'm trying to think, would it be, and that's not an operations expense. It doesn't seem that way to me, no. Here's an interesting one. Rejected for PPP2 from the same lender, unable to corroborate provided information. What does this mean? Okay, that's a really good question. That looks like one of the exception reports that SBA is automatically kicking out, okay? Remember I talked earlier about first round PPP was done in a real hurry, and there wasn't much done on the validation front, right? To make sure your taxpayer identification numbers were right, searching public records to see if you were registered with Secretary of State, even searching some of the criminal records. Although the criminal records, this doesn't sound like one of those, fortunately for Joyce. What this basically probably means is we've seen some similar to this where the Secretary of State records were different or were not registered with Secretary of State. That doesn't mean it can't be cleared up, okay? You need to work with your lender. They need to work with SBA and find out more if they can about what that means. I mean, you don't have the access to the SBA like we do, right? Your lender has that access. And what the SBA has done just last week, they realized that there's a huge percentage of exceptions being kicked out for this and other reasons. And SBA finally made their portal more user-friendly where we can actually submit documents ask better questions and get some real answers as to what exactly is missing and what we have to do to get you that second loan. Some of these exception notices that the computer is kicking out are very hard to decipher, and that's one of them there. But your lender has to work with the SBA. Let's see. I did get money from CARES. Would that affect the PPP application? Well, if your money from CARES was the first round PPP loan, you can still get a second loan if you meet the criteria that I indicated earlier. The big ones being the 25% reduction in total income in any quarter of 2020 versus 2019. That's the big major criteria for PPP2. Let's see. Calculating the reduction of FTEs, is there a percentage that you can be under your original FTEs and still get forgiveness? No, there is not. For the salary, they gave you 25%. FTEs, there was no safe harbor. Other than, fortunately, I gave you those exceptions. If an employee voluntarily took a fewer hours because they were concerned for their safety, if they wouldn't come back for a rehire offer, or if you were shut down by the government. Those three exceptions cover a lot of our healthcare providers. So that's been helpful. So for 2020 tax returns, the PPP loan amount does not get factored as part of gross income. That is correct. It is not taxable, period. It's not added into gross income. And again, the expenses are deductible. So it's double benefit for a PPP loan. So once again, I would just encourage, if you're in that group, the Fed survey showed 25% thought the process was too confusing and 37% didn't think they qualified. If you're in that group and didn't get a PPP1, take a look at the program. There are some huge benefits here. And the criteria for round one or for a PPP1 loan are not that strict. You don't have to show a reduction. You need to be a small business. You need to have less than 500 employees. And those are the major, and be in business on February 15th of last year, 2020. So if you're in that group, I strongly encourage you to apply for a loan. We are taking first round applications at FSG, and so are many other lenders. We're trying to help this economy as much as we can. And the program's there. I strongly encourage you to take advantage of it. Here's a good question. What's a NAICS code? The NAICS code is it's basically an industry code, right? Just do a Google search on it. The NAICS code. There's a nice long list of what a doctor, a dentist, medical doctor. It's 5 or 6 digits. I can't even tell you what NAICS stands for. National something industry code system, I believe. So that's a good question. Before applying for a second draw, do you have to apply for loan forgiveness? The answer is no. Good question. Another good question. You do not have to apply for forgiveness before you apply. So yeah, don't give priority for applying to that second loan before you fill out the forgiveness. The only thing you have to certify is that you have used or will use all of the PPP1 funds for eligible expenses. If you're sure you did that or will do that, then yeah, by all means, go ahead and apply for the second loan. Do you have to put your personal social security or the business EIN for the PPP loan application? Well, the answer is yes. SBA needs that. Now you can, most portals will have a secure system for submitting that. Or if they don't, work out with your lender to get it to them some other way. But when we submit your application onto the SBA's automated portal, we have to have those numbers so they can verify identity and other things. And that's that's a good question. That's very important. Let's see. Yeah, let's see if we can find one or two more here. Let me scroll down. Use $150,000 limit to trigger long form, a total of first and second draw. Good question. No, it is not. The 150, you can use the short form forgiveness application for both loans if they're under 150,000. In other words, you can have up to 300,000 and still use the short form twice. Our primary care physicians considered owners in the context of payroll and the PPP requirements. Most likely, yes. Depends a little bit how the business is structured. If you're working, if you have if you're a sole proprietorship, if you are the answer is obviously yes. If you're working for a hospital and you're on their payroll, then the answer is no. Please elaborate on federal debt, personal or for corporation or both. That would be for the owners. That'd be any owner, 20% or more has to be able to answer that question. So regardless of who is signing, if there are other owners, you need to go back and ask everybody and get the answer for every 20% owner and answer the question accordingly. All right, let's take, let's see, what's 107, maybe a couple more. I did not include my income as an owner in my first PPP loan. How do I include this in the second loan application? I do not draw a straight salary. That is a very good question and one that a number of owners overlooked in the first round. You absolutely can include your income. Typically the way it works, if you don't pay yourself salary, typically the way it works is you submit the payroll document for your employees. That's the W-3 or the 940. You calculate the average payroll for your employees, but then you can add your own salary up to $100,000 again, up to $100,000 annually. And that typically comes from your Schedule C on your tax return. So if you look at your tax return, Schedule C shows income of any income. You can add that, but again, cap it at $100,000. And then that goes into the calculation for average payroll for everybody. So yeah, that's a really good question. That was overlooked by a lot of borrowers the first time, but the instructions are very clear now. And that's another thing. The instructions are much more clear now from SBA. They've come out with a couple of very, very good documents, and we maybe try and get you a link to those that explain exactly how to calculate and what documents you have to submit. And it cleared up the situation such as the question you just asked here. Let's take one more. I see we're almost 10 after. I know everybody's got busy days. Let's see. Is employer profit sharing contribution to employee retirement fund considered a PPP payroll cost? Let me read this again. Employer profit sharing contributions to employee. Yes, as long as the employer pays it. Okay. You can't count the amount of any amounts contributed by employees, but if the employer pays that retirement benefit in any way, shape, or form, that can be included in the benefits or in the payroll, gross payroll calculation. Michael, should we stop here? I know we're 10 minutes over already.